Hello, welcome from my house to yours. This is a Lolly Wealth Management May update. We're all on self quarantine or social distancing. I thought I'd share from my house to yours. During this time, I know that we at Lolly Wealth Management miss seeing all of you face to face, but we're doing our best to take on this new way of communicating through virtual means. And we want to make sure that we are communicating with you because we are here to help you, to assist you with your financial planning. And we don't take that lightly. We know that you've entrusted us with your financial futures, and we want to make sure that we're there to help. We may not be at our offices, but we are here to help you. So make sure that you reach out to us when you need us. Today, I'm going to just take a look over on, what's it like for us working from home. Just give you a little bit of update on the whole team, Kelsey, Tracy, and Beatrice, myself. Then look at the current market conditions, and then also talk about your financial planning and making sure that we're staying the course during these turbulent times. Just taking a look at, we're making sure that we're in the office, or not in the office, but in our home office on a daily basis, but just making sure that we're taking care of ourselves. Here's Kelsey out for a hike with her partner, Kyle. Tracy, I know that she goes on her daily walks, making sure that she's getting some healthy vitamin D. And then here's Beatrice, out for a nice run, getting some exercise in as well. And then here's a little glimpse into our drive-by birthday party that we went to for my nephew that just turned 11. We want to make sure that you are knowing that we're taking care of ourselves and that we are trying to do our best during these uncertain times. I want to just make sure that we recognize Administration Appreciation Day, which was on April 22nd. We want to make sure that we know that you know that Tracy and Beatrice are very, very important to our overall practice. And through all this whole transition to working at home, without them, I have no idea where we'd be and what this would look like. Some important anniversaries actually that are coming up. For me, the most important for me is to wish Tracy a happy 35 years at IG. She's been working with me for about 18 years, but with IG for 35 years. So congratulations to Tracy. And then on March 13th, 2020, I joined IG years ago. So that is a big anniversary for all of us. And then also too, that's just come to my attention is that Beatrice has also been with us as of June for 1 year as well. So a lot of things going on while we're working together but apart. Another thing that's happened because of the COVID-19 lockdown is that our insurance partners, so any life, disability, critical illness, long-term care, they've made it very, very simple for people to apply for insurance coverage. And they're able to, in most cases, we don't have to go and get fluids or vitals just because of the social distancing that we're required to take part in. So if we're looking at maybe some conversions for mortgage insurance, or maybe just looking to increase your insurance because of a life event, or maybe it's an estate planning insurance play, just please contact us to see if you qualify for the simple insurance applications. Well, the one thing that's been on a lot the news, I don't think I've paid attention or looked at the news as much as I have in the last couple of months. Not only, I'm always looking at stock market news and financial planning news, but now just general news in general. So there's always something going on. And so there's always a lot of uncertainty that's going on. And the one thing that I know that when it comes to markets is that markets don't like it when we are in a constant change and a constant flux, and uncertainty is definitely one thing that they don't like. So let's just look back over the last 10 years and say, back in 2009, it was really pronounced that this is the death of capitalism. when the market, the S&P 500 in the United States, touched down in around the 700 point mark. We just closed at the end of the year over 3,000. This was when they said, capitalism is dead. And then we see from 2009 and all the way up until just here in February 2020, we had this long bull run. So again, a lot of times they think about, they proclaim things are dead, then things come back and roar ahead. So over these last 10 years, the conversation has always been is that everybody's in constant fear that there's going to be another crisis. And I understand that. We're humans. It's human nature to try to think that. And I don't think it's unlike any other time when there's been the Great Recession that occurred where people are worried about it. But we know that things came back, and same thing's going to happen after this pandemic. You see the compound rate of returns from December 31st, 2008 to December 31st, 2019 on the TSX, 9.2%, and on the S&P 500, 15.3%. So the US against Canada, we can see this is why we always have a diversified portfolio for you, is we want to make sure that we're participating in all the markets around the world. So now, where are we going to be now? Now there's a big question, is how bad will it get? What will the economy look like? What are things going to happen when we close everything down? Because this is unprecedented, and we want to make sure that we are taking care of, making sure that we're looking at opportunities that present themselves when it comes to our investing. Very important to understand too is what you do with your investing is going to be very determinant in your overall success. The red dots in this graph signify the intra-year declines versus calendar returns in the blue lines. So if we even go back to say something like 2002 or 2003, where during that year we had a negative 15% decline, and then by the end of the year we were up 26%. So it's important to look at these things and say, hey, when we have a decline like we did in March, we don't want to have any knee-jerk reactions and get out of our investments when we are in inopportune times. So what I've wanted to share with you today is just some questions that have come up in our conversations when I've been talking to clients, reaching out to them and discussing their financial plans and their investment portfolios. One of the questions that's come up as of late is, after the end of March, they're asking, why have markets gone up since that time period? Because in a lot of portfolios, markets have gone up, and people understanding like nothing's really changed. We haven't opened the marketplace back up. There's no great earnings. Why has this happened? One of the things that there is no definite answer why this has happened, but one of the reasons why we look into this is that markets are always forward looking. So they're looking out over the next 12 to 24 months and say, what is it going to look like in the future? And they're planning around that. They're not planning around what was going on in March. That's what economics are for. Economics are always backwards looking. They're looking at those numbers because we never get the unemployment numbers. We don't get the GDP numbers until they're already done. So their economics is looking backwards. And when we're looking at stock markets, they're looking forward. So they're looking at optimism in the future. Also, too, is we also look at interest rates. Interest rates are at an all-time low when it comes to government bonds. So with government bonds, if people are looking for yield and they want to invest their money in something that's income producing, they're probably going to look at stock markets for big blue chip companies like banks and utilities to provide them with dividends instead of looking at the bond market. So that's another reason why stock markets may have gone up. Again, this is just the may-haves, why things are happening the way they are. Another question that comes up is, should I sell now that markets have regained a little bit of the losses that happened in March and then maybe wait till they go down again and reinvest? We never want to do that. We always want to stay invested. Staying invested is what's going to make sure that we're going to partake in the best days during those investment times. So if anybody would have sold out, even if somebody had sold out in mid-March and they haven't got back in yet, they've already lost a lot of those gains because they're not in the market and not staying fully invested, even though their investments went down. Another question that comes up is, where are the opportunities right now? There are opportunities. There are opportunities. Whenever there is volatility, there is always opportunities. And the men and women that are taking care of our clients' money within the different portfolios, they are looking for opportunities. They're looking to buy and sell some of their investments and make sure that they are there to take advantage of any sort of upswing as we get into that area. It's important to understand is that most portfolios turn over their 20% of their investments over a 1.5 year period. A lot of funds have turned over their investments over 20% over the last month and a half. So you got to see that there's opportunity out there for them to sell some of their investments and also buy into some other investments. So yes, there are opportunities. There are opportunities in individual securities as well, but then you get into company-specific risk. And sometimes some people can stomach that. And if you do, call us, we'll talk about it. We'll see what's best for you. But this definitely is an opportunity, if you can, to invest in money, invest in investments that are down now, and then we will reap the rewards in the future. It's not like gasoline. Yeah, it'd be great to be buying gas right now. We just have nowhere to go because gas has gone under $1, which I never would have thought I'd see that again. But there is nowhere to drive. There is nowhere to do things. We can't really stockpile gas like the way that we like to here in the city, that is. So we want to make sure that we are buying our investments at a downwards trajectory, so then that when they gain, we'll partake in that gain as well. So let's talk a little bit about your financial plan. So these aren't specifically to your financial plan. These are in general terms. When you have questions about your current financial plan, especially with this downturn that's happened, please give us a call. We will answer those questions for you. We are there for you throughout all of this. We know that Canadians are living longer, and that's an important thing to consider when we're planning for our retirement or planning for our financial planning, is that if we have a couple, they're both in their 60s, we know from an actuarial standpoint that one of them is going to live into their 90s. So we have to plan sometimes for 25, 30 years of retirement. So it's important to understand that we need to plan for a long income stream. The other thing that we look at is inflation. In this case, we're using fast food. It's just a comparison. I know a lot of people don't eat a lot of fast food anymore, but if we look at it, if you did eat fast food in the 60s and you could buy a hamburger for an average price of 15 cents, well, today you have to actually pay $1.29 for that same hamburger. And a milkshake used to be 22 cents, and now it's $2.49 for a milkshake. Those are big inflation over the last 50 years. So we have to plan for that. If we're planning for a 30-year retirement, is your dollar today is not going to buy the same thing it was buying. Will not buy the same things in 10 years from now. We also look at the world of averages. A lot of times people will say, if I get a 5% rate of return, I have $100,000, I'm going to take $600 out a month. I'm going to be able to take that money out until age 89, and then I'll run out. Well, we know that we don't live in a world of averages. Things fluctuate. So we use sophisticated software to assist us in looking at the Monte Carlo analysis to see if we're actually going to fulfill our retirement dreams based on a sequence of returns that is not consistently always 5%. Some years we're going to have plus 10, some years we're going to have negative 10, some years we're going to have plus 20, negative 5, but we know that it's always not going to be 5% rate of return on a consistent basis. We also have to look at our diversification of where we're getting our income in retirement. We don't want to just be getting all of our income from one area, say that we're getting all our money from our RSP investments. We want to make sure that we know where our different incomes are coming from, just in case one of those pillars breaks. A lot of times with clients, we look at where's our pension money coming from. So if our pension money is coming from CPP OAS, that's one pillar. Then we're looking at sometimes some defined benefit plans. Then we're looking at RSPs or defined contribution plans that we're receiving income from. And then from there, we may have some rental income and some other things that are coming out of our investments, or some non-registered investments, bonds or fixed income. So we want to make sure that we have diversified pillars along the way as well. How much can I take out? That's always a big question as well. How long will my income last? So we're looking down the left-hand side, there's the withdrawal rate and there's years of income. So if we have our nest egg of say $100,000 and we're taking out $3,000 per year, we know that that nest egg is most likely going to last as long as we live. But if we start taking out 5 or 6% as we go out over those 30-year time frames, we have less of a chance of making sure that nest egg lasts over that time frame because of the withdrawal rate that we're at. It's just because we're not keeping up. Our investments aren't keeping up with the amount that we're taking out in a moderate portfolio. It's a very simplified example, but it's something that we have to consider whenever we're looking at how much we're going to take out of our investments. So that's a little bit about financial planning, and that is the crux of what we do is the financial planning. Yes, we look at your investments, but it's the financial planning that really makes sure that we're taking care of what we need to in order to have a successful retirement in the future. Next is, what we've been hearing from friends and clients is that a lot of their friends and family they have their investments at other financial institutions, and they're not getting the regular updates from their own planners or advisors. So we want to make sure that we extend the invitation for you to give them our names, our numbers, or call us and have us reach out to them, because we are going to make the time, even if it's in a virtual world, to assist your friends or family if they need it at this time, because I know they're important to you and they're important to us if they're important to you. So from Lolly Wealth Management and the whole team, Kelsey, Tracy, and Beatrice, I want to thank you for entrusting us with your financial future. We're here for you during this time, this unprecedented time for all of us. And please reach out to us if you need anything from us. We look forward to speaking with you, and please stay healthy and stay safe.